The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time, Wednesday morning. We got markets in slightly red territory. S&Ps, we kick things off negative by about 8 points right now, trading at 61.38. That's about 0.1% in the red. NASDAQ 100, we're negative by just 0.1% as well. A little bit of volatility this morning, but negative by 16 points, 22,215. Dow off by 99 points, or 0.2%, 44,543. And the Russell leading the way in negative territory, off by almost 0.8%, or 17 points at 22.80. Crude catching a little bit of a bid, 72.63. We jump over to gold. Gold contract continuing to rise higher, testing the highs we saw Friday. We were above 29.60. Briefly this morning, you're talking about highs of 29.68. This morning, we hit 29.64.40. Gold pushing all-time highs, which is remarkable when you look at the fact that we have yields slightly higher. You got a 10-year right now sitting at about 4.57. The yield on the 10-year. The dollar with higher yields back above 107, but all things considered, right? Gold pushing those all-time highs, and we have the dollar still above 107. And you take a look at this dollar. You know, I think we might be building a little cause. We're at a critical area, that's for sure. 107, and a great day. We're going to be talking to our man Teddy Kegstad, the writer of the Tiger Forex Report. He's on with us every Wednesday at 40 past the hour, so he's coming up later in the program. Dollar back above 107 right now. S&P's negative by 9. We jump over to the VIX. Put it back on a daily. And you can see, just chopping around with a 15 handle right now, 15.33. We go back to a 5-minute chart. And, yeah, we get a little bit of volatility suck out, even in the last half hour or so. We're at 15.75, 15.32. What is interesting, you end last week at a 14 handle. The market starts off yesterday with higher volatility premium, even when we were trading in higher territory. And you saw what happened. We had a little bit of volatility. End of the day, though, quite a rally in the markets. To jump back to the S&Ps. Look at that rally at the end of the day. S&Ps were coming into the close at 345 at 61.30. You closed at 61.50. You make it to 61.55 overnight, but guess where we are? We're right back to almost 61.30, right? You're right back to where we were, where we chopped around for the better part of yesterday. And what do we got? We got a little bit of tariff news out there, as we always do. Guess what? This is going to be the case. It's not changing. This is the case. This is how we're going. I think the market's shaking it off this morning. They'll shake it off until they can't. And it's going to be interesting to see what moments matter, what moments doesn't, what moments do not matter. In a past life, a headline like this would have reverberated through the stock market. So it is interesting that, Trump floating 25% tariffs on U.S. autos, drugs, chip imports, April 2nd. Put it on your calendar. Okay, that's 6 weeks out. That's a far timeline when you're talking about it. And we saw what happened prior. Remember, he put it on February 2nd. They actually came over the weekend. He gave him a reprieve Sunday night. The deadline now is April 2nd. On Bloomberg this morning, they're talking autos. They're talking what car companies are making what percentage of their vehicles, right? Imports, exports, all of it. I'll probably tell you that on April 2nd, but it'll be in the neighborhood of 25%, talking to reporters at Mar-a-Lago. So, yeah. There was a chart in an earlier article I was reading. But nonetheless, the market shakes it off. We'll see if they shake it off on the open. S&P is negative by 8. NASDAQ 100 negative by 17 right now. The other thing we get today is we get Fed minutes, 2 p.m. Eastern time from their January meeting. We get Fed speak this week to a certain degree as well. We'll see where that shakes out. But let's check out how some of the biggest equities out there are trading. We got Apple shares You talk about a rebound yesterday from 242. They close out the session. Look at that buying at the end of the day, right? We're sitting right now basically flat for Apple, slightly in the red with the market. Amazon, quite a day to the downside yesterday. Look at that drop, right? They charge higher at the end of the session with the market, but you traded from almost 230 to 224. And right now, we're actually negative by almost $1 on Amazon shares. Tesla shares trading at 353. Reports out there that Elon, let's go to that article. So he's going to be raising money at the same valuation he bought Twitter, $44 billion. You know, I find myself saying, what a great time to go to market and says, who wants to invest with me when you're literally holding court in the Oval Office? Okay, that valuation, we'll see if people do it again. I mean, we saw the bankers that lined up last time, right? Some of the biggest losses that they had ever taken in the debt that they provided to Elon to buy Twitter. But they did it in the hopes of furthering a relationship with the richest man on the planet. And he says, you know what? Now's a good time to see if we can get more investors at that 44 billion mark. So we'll see if that comes in. But yeah, in talks to raise money at the same valuation they bought Twitter in 2022. And they'll probably line up again. Having a business relationship with somebody who literally holds court in front of the president, man, hadn't seen something like that in a while, in the Oval Office. And, you know, as someone with a child around the same age, right? Tommy, he's 4. I'm not sure how old his son is, X. Maybe somebody knows. But it's in the ballpark. And I love bringing Tommy. I bring him on the program everywhere. And I'd bring him to the White House. And I'd bring him in the Oval Office. But if I was holding a press conference for the country, I'd probably give that press conference my undivided attention. And so, you know, there's something at play there with his answering questions of the most importance and having your kid run around. Either way, I digress. All right, we go back to the market. And let's check out those yields. Because, yeah, we get a little bit of lower price, higher yield coming at you from Friday, right? We got the 10-year at about 4.58. We get the Fed minutes coming up today. And let's jump around to what else we have going on. So speaking of, you know, let's get some numbers, man. There it is in the Oval Office. And I want to see savings. But they're not quite there yet in the details. So we'll see if they start coming out. But they're talking about 8 billion. The numbers are 8 million. We'll see if they come out. Oh, man, this one's a number 2, man. So the top hedge fund earners out there, the usual suspects, Izzy, Englander, Millennium, 3.9 billion for the year. Not bad. All of them combined, 18 billion. In the blue here is how much they're making from performance fees. In the black is how much they're just making on their own money invested. Now, what's remarkable is that when you look at, Rob Citron of Discovery, he made $730 million, and he only runs a fund with $1.5 billion. And the reason why is because most of that money is his own. And so he made 52% last year, and you run a fund with $1.5 billion, but it's all your money, and you make 52%, guess what? You made $730 million for the year. Everybody else on this list manages, well, the top earners at least. Yeah, Ken Griffin, Izzy, each have $60 billion. He's got 1.5. Huge year for Discovery and Citron. But yeah, 3.9, 3.2, 3 billion. Big numbers, man. Stevie Cohen. Maybe he'll put some of that money in the Mets. All right, folks, stay tuned. We got the S&Ps off by 11. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. NASDAQ 100 off by 36, Dow off by 120, and you take a look at the volume in these markets. Unimpressive is how I was putting it this morning's letter. Let's delete these real quick, delete those real quick. And you take a look at it, not denying, we had an increase in volume yesterday. We're looking at the S&P right now. You had contracts of 1.15 million. That's yesterday. Day prior, 967,000. But in general, since we reached this high, you get the pullback on January 27th, 2.28 million contracts in the S&P. You do surge higher from that low of 5,950 on 2.2 million contracts. You make it to 6,050. But we've drifted up 80 points in the S&P from where we were February 3rd. And in general, you got declining volume numbers, occasional spikes, but you can see the spikes are declining, right? Lower lows, lower highs. You take a look at the NASDAQ 100 in a similar area. There it is, volume unimpressive, 22,450 is the high from December 16th. You rip lower on January 27th. And since we've climbed higher out of that acceleration lower, you have lower lows and lower highs going on a volume. So not indicative of the type of strength you'd like to see. Doesn't mean the market just can't creep higher, but we're bumping into some pretty important technical areas here, especially in the S&P, as we're within ticks of all-time highs. You make it to 61.57 today. We've backed off a bit. NASDAQ 100, 22,199. Check back in on the gold contract. Gold within a few dollars of all-time highs as well, 29.68. We've just been consolidating for the past few days. That's your daily. You take a look at the weekly. And I think we're setting up to push to about 33.50, man. That's the next move higher. And maybe we'll keep our eye on the dollar As I said, we talked to our man Teddy. Going to be a great conversation. We'll see what he's thinking about this market. Just flirting with 107 right now. 107, 134. All right. And how about Nikola? Yeah, the EV market. They filed for bankruptcy. How about being valued at $30 billion in 2020, worth more than Ford? Pretty remarkable, man. Buyer beware, as they say. They have about $47 million in cash. They're going Chapter 11. And how about that slide? Right? And the writing was on the wall. Not surprising, but man. I mean, you like to, consider it. Nikola up there at 356, and look how long it took, right? You get those occasional spikes. You were at 100 a year and a half ago. Whew. Now, you compare that to a company like Rivian. Not quite the same exact, but boy. And Rivian, not quite the same, but look at that chart. Not that much different in terms of the trends. We'll see if Rivian seems to caught a bid around $10. You're at $14.44, but similar deals, right? Rivian, they make a big deal with Amazon. You had Nikola up there. They'd make a big deal with General Motors. Multi-billion-dollar deal with them. Amazon signs the deal with Rivian. They both go public. And boy, they fleece the market, especially Nikola, when you go from $30 billion down to nothing. Now, Rivian was pushing, what are we at here? Just for buyer beware. They're a $14.5 billion company right now. But yeah, they were pushing like an 80, 90, $100 billion valuation when they were pre-revenue and went public. Talk about a move, man. All right, speaking of moves, Netflix pulling back from the highs, 1,064. My goodness, right? We actually break out of the channel on Netflix. You pull back, you test that channel, you bounce higher as well. Now, if you're looking to get into Netflix, you got to give it a little room. Maybe you look for it to come back, test that channel line. This is on a weekly, going back from the lows of 162. We take a look at Meta shares. So yesterday was the first day in 20 days in a row. And what do they do, though? You see how this market, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. So you trade higher for 20 days in a row, and in one day, you trade back to where you were 12 days ago. Right? Volatility always on the downside. And that's just a natural pullback with the market volatility, with Meta shares, with the run ahead up to 740. Today, though, yeah, you're down almost a full percentage again. You close at 716. You're down about $7 to 709 for Meta shares. We check out Google shares this morning. Talk about a move yesterday. We have these Amazon, Google, right? So many equities trading lower of the right now basically flat. We check out Apple shares. Holding up well at 244 and change, slightly in the red. It's going to be an interesting one on the open. This market looks a little jittery, in my opinion, at these highs, as I mentioned. 22,450. It's critical technical area. And the reason why I like setting up trades like this, okay, is that you know when you're wrong. You look at this market, right? You're looking to sell this market. You got a perfect technical area here. Okay? You don't have to give yourself a ton of room to the upside. This thing breaks higher, you're wrong. And you can be wrong. You're going to be wrong. But if you're right, look at the type of volatility you might have to the downside. And it goes across similar in the NASDAQ 100, right? You were just at this level at 22,000 and change back in late January, 22,450, all-time highs in December. Okay? You come into the election at 20,500. So we're good 1,700 points above where you were there. So there's room for volatility in this market right now. You check in on Walmart. Talked about Walmart on the program yesterday. They're actually dealing with a forward PE that's above Amazon. Yeah, I think they're 12-month forward PE. You're talking about 38, something like that. So they have expectations sky high. They'll come out with their numbers tomorrow after the bell. That's a weekly. You take a look at just the last year. Let me delete that. And yeah, almost a double bagger from 57 up to 105. You back off a bit today. We're going to be basically flat, trading at about 103. But this market's giving it up a bit right now. As we come into the opening bell, you got less than 5 minutes. And we've given up almost 30 points from where you were overnight. You see the volatility. We're making pre-market session lows right now. And we're at a critical area. You look at where we were at 10 a.m. yesterday. We're right where we were before you got that acceleration into the close which was volume driven. Look at the volume we got in the last 5 minutes, and you get volume in the end of the day. Quite the acceleration. But NASDAQ 100, similar area, coming into the pre-market session lows right now. We keep our eye on the dollar. Yeah, just flirting with 107, 107.11 right now. We check out yields at 108.24, 10-year at about 4.57. As I mentioned, we get Fed minutes at 2 p.m. Eastern time today. Shouldn't be anything shocking, but always something to keep your eye on, especially with this market. What do they have to say? Are they talking about the potential tariffs? Are they? We'll find out. Maybe there'll be a mention. Maybe the market will care. Maybe it won't. Nonetheless, I think we got two-way market right now going on. You saw it yesterday, right? Look at that two-way market yesterday. Yesterday, from 61.57. Down 37 points, and you get it all back by 8 o'clock, 10 o'clock last night. But where are we to kick off the session? Right near the lows. Two-way market right now. Stay tuned, folks. We're coming back for the opening bell. Don't go away.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. S&P's off by about 13 points to kick things off. NASDAQ 100, we're negative by 32. Dow off by 153. The Russell right now off by almost a full percentage point. You see the move there, 22.75. Something always to keep in mind. The Russell, when you get some rate volatility, which we have a bit, we got rates up a bit from where we were yesterday. Russell always a little bit more volatile in particular when those rates, because their duration is very short. in the Russell because they're smaller companies. They can't issue longer-term debt to the public at a very affordable rates, all right? So they have a lot of debt that's more short-term. They're more exposed to higher interest rates as they go forward. All right. Apple catches a little bit of a bid on the open. We're up by 0.2%. We check in on Amazon after their slide yesterday. Yet again, yeah, Amazon. I love Amazon, love them in the long term, but you got to be a little worried when you see this type of action when the market opens. We got sellers coming into this market at the open each day. Amazon off by a full percentage point. Microsoft down by 0.4 right now. We check out Tesla shares. They catch a bid up 0.5%. Jump over to NVIDIA, down by about 0.3%. How about Intel, right? Intel gives it back a bit today, though. A little bit of reality checking in, off by 4.6%, but up to 27.88. I think it was last week, best week it's had since like the year 2000 or something like that, right? It's been a long time since they've had a week like that. There's your weekly bar. Now, the one thing I'll say is, let's look at this. How about that volume, right? That's what you like to see, man. Now, that was the week of September 16th. And what does the market do? We actually almost do like a full bullish engulfing bar for that entire. You didn't quite get there. It's interesting. Let's put it on a monthly. Yeah, look at that. All right, you're going to engulf the last 1, 2, 3, 4, 5 months. And you're going to take out everything that you did since their earnings 6 months ago on a monthly basis. And you're probably going to do it on volume. You already have 1.47 billion shares traded. And you got to get to about 2.1. Yeah, $30 is going to be the area. 6 months ago, that's where you trade on earnings, and you're going to face some resistance at that level. You're trading short term, keep that on your radar, man, for Intel, because that's going to be a tough area. There's going to be a lot of tough areas is what's going to happen on this equity. There's your daily going back a year. All right, and you can see, look where we are. We're in the $25 to $30 area. That's the lowest of 2022. Imagine, there's probably a lot of people that were buying into this thinking, man, if I liked Intel at 52, I'm going to love it at 25. And then before you know it, you're sitting at 18. You're sitting at 20. 2 years later, when the market's higher, you're now back to that area. So you may face some headwinds there as we get the market trailing off a bit. But Intel giving up some of those gains, but on a weekly basis, yeah, looking strong. And quite a week last week. Can't deny the type of volume, the type of price spread. And that is a sign of strength, as my dad would say, right there. So, got a lot of work to do, but keep your eye on it. And yeah, we got markets melting off a bit right now. The day is young, as our man Basil Chapman would say. And yeah, Basil, he is out this week, folks. He's going to try. He's doing a little traveling. He's going to try and do his program. I don't think he's doing it today. Next, we'll do a replay. But yes, I think he's going to try and do his program on a couple days if he can. Well-deserved break for our man Basil Chapman, man. Okay, let's talk a little bit of Boeing. Some Boeing shares up by about 0.5% today. We take a look at a weekly. Now, let's go back even a monthly, right? Let's take this line off because that ain't happening no more. And look where it bounces. You talk about technical areas on a chart, folks. Okay? Look at the technical area of 150, right? Pretty remarkable that you go back to where we were trading in 2014. At that price level, you were at 144. You trade down to 137. You're back to 186. 200 is going to be a difficult number for this equity. All right, that's where we were in the middle of 2024, and that lines up so well with the lows we had in 2023. All right, and just like we were talking about, and then you got 250 out there. Now, from the journal out today, Airbus, and, you know, this is last night, I guess, 9 o'clock. I was reading it this morning. And, you know, a lot of what I'm looking at is technicals, folks. I do talk about my anecdotal experiences, talking about my affinity for Sam's recently. We'll see if Walmart can live up to the expectations tomorrow. They got a lot of expectations. Remember that. That forward PE they're dealing with, Walmart has a lot of expectations at the price they're trading at right now. Nonetheless, don't understand many of the fundamentals. Definitely don't understand, but check it out. Airbus. How about 500 orders, right? The A321 XLR, they started delivering it late last year, and they have 500 orders. Amazing, right? From airlines looking to replace older Boeing jets. Now, I always say there's two companies that make airplanes in the world, Airbus and Boeing. Airbus is a European company. Boeing is an American company. There's no way we should ever cede that, as in allow. Of course, it would be in the financial interest. So if Boeing ever really is in trouble, federal government's probably going to come to their aid to make sure they can compete. That's the backdrop, okay? But with that said, Boeing has a lot of work to do to catch up, man, right? They're over the strike they had. They're cash strapped. That's linked into the many articles we've seen. But yeah, you're talking about many fleets choosing that Airbus to replace the Boeing 757. And so Boeing having some real problems at the wrong time. So Boeing discontinued the 757 in 2004. Crazy it's that long ago. And the U.S. company's main rivals, the 737 MAX 10, is years behind schedule, awaiting sign-off from the FAA. Clearly, the first priority for Boeing is to resolve the manufacturing problems. Yeah, they got some issues, man. So, longer term, there's your chart of Boeing, okay? Boeing, like I mentioned, we were just trading back at 2014 prices. You wipe out 11 years, just like that. You're up to 446. All right. The 737 MAX saga is what took this from 446 down to about 350. Now remember, that's all that happened. Okay, this equity was sky high, no pun intended. And what really shot this down was COVID. You rebounded thinking it was okay and things. So the problem, COVID's not a problem anymore, right? What's a problem is the fundamentals of this business. And you can see how underpriced that was when it was trading at 350, when it was trading at 325 coming into COVID. We're trading at almost half of that price level even. But yeah, I look at an article like that talking about that Airbus is swooping in and replacing Boeing planes with 500 orders already. And it's going to take some time for that company to compete again, as they've had a fundamental failure, and they have some work to do, to put it lightly. All right, we got markets chopping around slightly in the red. Catch a little bit on the open. S&P's off by 12. NASDAQ 100, we're off by 27. Dow sliding to negative territory, though. Dow right at the lows. Dow off 184 points. Walmart catches a little bit of a sell there, down about 0.5%. And we check in on the dollar. With the dollar sitting at 107.15. We check out crude, trading at 72.80. Crude catching a little bit of a bid. All right, folks, stay tuned. We're coming back with our man Teddy Kegstad. We're going to talk some currencies. We'll talk some commodities. Always a great conversation. Don't go away. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps negative by 11. NASDAQ 100, negative by 47. A little bit of volatility kicking off this market. And right now, we're going to go to our man, Teddy Kegstad, as we do each and every Wednesday at 40 past the hour. Folks, you can check out Teddy's outstanding Tiger Forex report. It's right under the newsletter tab. Head on over to the front page of TFNN. You hit the subscribe button. You're talking about $97. It comes with a 30-day money-back guarantee. So check it out. You get the newsletter for a month. If it's not something you're going to use, you gain the knowledge, you cancel, you get a 30-day money-back guarantee, and you can't go wrong with the type of education, the newsletter he puts out every week. Teddy Kegstad, good morning.
Good morning. It's freezing cold in Chicagoland, man. It's a long underwear sweatshirt day.
Uh-oh, what are we talking about when we talk Windy City, man? We talking single digits? Where are we? I know that wind
right
is
now,
remarkable out there.
It's finally gotten up to 4 degrees, and it's like a negative 10-degree wind chill factor.
Oh, you know, Boston's cold, Teddy, but man, I always hear the stories and Chicago cold seems like it's a different kind of cold, and it is by those numbers. Well, thanks for tuning in. Stay warm. What do you think about this market, Teddy? We got the dollar chopping around 107, right? We got yields at 4.58. No huge moves just yet, but what are you looking at in this market most of all right now?
Yeah, it's kind of a quiet day today. I think we're waiting on the unemployment claims tomorrow. It's kind of a lackluster numbers week, you know. There was a couple swing trades over the past couple of days, but if you really look at the ranges, they haven't been that exciting, especially what's going on today. So I would be very careful with what's going on as far as the currencies are concerned today. I mean, there's really not much of a movement going on, and we can talk about, I mean, I think if you're going to look at something, let's take a look at the yen real quick. So
nice.
The U.S. dollar yen, you know, yesterday it was higher. Now it's basically made a little bit high than from yesterday's move off of the lower low that they had set. But you're basically an inside day almost, just a little bit outside on the high end, but not outside on the low end. So it's a choppy trade. I mean, if you really look at where we've been over the past, you know, Monday was a holiday trade. Yesterday there was a couple nice little trades, but if you look at the actual what there was to gain on a swing trade, it wasn't a lot. You know, I mean, there's not a lot of money on the table. So I think you got to really kind of pick your points and have rational expectations, and don't try and pick a major move. You know, like I got some people on my one streaming channel, some people are always itching for trades, and I always throw out like the new ones. I'm like, hey, patience is all about how this game is, you know, won. I'm like, if you want to just force a trade and do whatever, I'm like, you go right ahead and do that. I'm like, I have no problem capitalizing off of your kind, you know. So I mean,
I think, and I agree completely, man. It's a great point. The mental aspect. I mean, there's so many aspects, but the mental aspect of risk, and you know, we all want to find profitable trades. So there's almost like a bias, right, to want to trade, to want, because you know, if you're not trading, you're not making money. But guess what? Sometimes there's no opportunity, and that would lead to losses. But it's always a battle. But it's a great point, man, because we all deal with it. I know we do. Hey, how about crude? We got a little bit of a bid in crude right now. We're climbing towards $73. I know I always check out your newsletter, man. You cover crude. You have upward areas, downward. We're climbing a little bit. What do you think of crude? 72.77 right now.
You know, I like the low that they planted yesterday, and a new swing low. And right now we're back up kind of in the middle of the range that it's been in for the past 2 weeks. I look at it as a sell rally, profit-taking move. I think that we made a lower move low. Now I think we're going to go and set maybe a lower move high. I don't see any big extreme. I mean, maybe we get back up to 74 and then fall back down again. So, you know, I think that it's going to be, we're not going to just crash down to lower prices in oil, but there's no reason in the world right now for us to go spiking higher. There's not a fundamental reason. There's not any momentum, you know, technically or anything. There's nothing short of some sort of, you know, God forbid, an accident, you know, that I could see that would cause a spike in oil. You know, I mean, obviously, if there was a refinery issue or something like that, then we could see something like that. But, you know, right now it seems that it's just steady as it goes. It's not a sexy trade. You know, it's not going to be the high flying, you know, market that it has been. I think right now it's going to be a grind, you know, basically making, you know, lower lows and lower highs, but it's not going to be an excessive trend. The slope is going to be very, very, you know, it's going to be a bunny slope. You're not going to be skiing down a double black diamond on this one.
I got to go skiing, man. I see all these. I was just thinking, you know, you get me. I used to ski all the time in the Northeast, steady up in, you know, some great mountains, of course, in the Northeast. Never really made it to Colorado. But being in Florida now, I don't want 4 degrees steady, all right? I don't want 4 degrees skiing. I want like 34 degrees skiing, but we got to make it up there skiing. Hey, big picture, right? We got tariff headlines, of course, today, but that talking about autos, talking about maybe April 2nd. That's really far out, I think, in terms of how things are going right now, moving so quickly. 6 weeks out, there's a lot that can move. But I just was thinking, you know, getting ready to talk to you this morning, you know, bigger picture. What goes through your mind when you look? Because obviously they matter, right? Trump got elected. We had the dollar surges higher from that move. What are you thinking right now as we're it's February 19th, so we're almost a full month. And what do you think generally? Is there anything that goes through your head, or you're just kind of pushing out the noise? Or I just want to get your take generally. You know, we're getting a lot of tariff headlines. They, of course, are potentially going to impact currencies. What do you think in the big picture right now on that?
Oh, I love it. I mean, as far as the economy, I think long term it's going to have a tremendously positive effect for the American consumer, the American businesses. You know, I mean, we're already going through pain. And the reality is you know, Americans look at everything on a one-sided picture. They think about themselves and what we're doing, but they don't even realize what we are doing in half of the situations, especially when it comes to cross-country economics. You know, the reality is that all of our goods there's tariffs on everything that we send out overseas to everywhere. And they're not just like 10%, 25%. I mean, Canada has upwards of 400% on some of the things that we export to them. But we don't export much to any of these countries overall. But everything is tariffed like huge. So there's no incentive for our products to be sold anywhere. You remove those, guess what? Competition breeds good pricing. That also keeps their price of their goods in those countries where they don't have as much money very high. Guess what? They take the tariffs off of our goods. They have to drop the prices on their goods in their country. Competition brings fair pricing. That means more business for our companies, better pricing globally for everybody, both in America and in other countries. The consumer wins. You know who loses? The politicians. Those are the ones who lose. You know, so they can't, because that's who gets the money. It doesn't go to the
hopefully that plays out, because I think we're all on board with that equation. And I try and look at things through the lens of Tommy, which is great. And everybody should, no matter what, longer term, right? It doesn't really matter. We can all be okay in a year or two. And I say that, you know, of course, there's hardships, but longer term. And so, yeah, I hope for that, man. We'll see.
I
think, you know, as traders, Teddy, I say we got a two-way market in a lot of markets right now. Even with the S&P sitting at all-time highs, we got rallies, we got declines. We have NVIDIA losing $1 trillion in market cap, man, over the course of you know, X amount of days. So we have some volatility, which as traders, I like it, man. Well, Teddy, I appreciate the time as always, man. Great to talk to you. Stay warm in that windy city, man. We appreciate it as always.
If things go right with the tariffs, that bottle of Coke you spent $3 for, maybe little Tommy will be spending $1 when he's your age.
Well, I want bottled water cheap too. No Coke for it. No, I kid. But I know, right? Crazy. I think about two. Yeah, Teddy. Thanks so much, man. Have a great week, Teddy. We'll talk to you next Wednesday, man.
Bye-bye.
Folks, check out the Tiger Forex Report. Outstanding report. Teddy puts it out every Monday. New updates throughout the week, especially timely with everything going on. Go check it out during the break. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the market right now. NASDAQ 100 just chopping around. Pretty much almost where we kicked off the session, right? 22,189. We're negative by about 40 points, or 0.2% in the red. S&P's 0.2% in the red as well. Off 11 points. S&P's closing at a record high on the cash basis yesterday. Record territory. And as I mentioned, just not the type of volume that's convincing, but doesn't mean the market can't trail higher on that, okay? That's the thing you have to mistake there. Don't get overconfident when the market can remain irrational for longer than you can remain liquid, right? Or what's the expression? Whatever it is. I want to see a volume spike. Maybe you see it. You'd want to see it break above this level, okay? You'd want to see that volume come in. As you see, declining numbers of volume since we traded on that spike low. You had that spike as well when we traded higher. That was a sign of strength, but since then, those numbers dropping off from there on the S&Ps. And yeah, they're talking about home builders in the YouTube Tigers Den. Gene, yeah, look at these charts, man. Lennar. Everyone says, everything's great. Oof, you talk about some industries, man. Okay, that's the election. Yeah, there it is. 175. It's not stopping. Down another 2% for Lennar today. Now, Lennar, okay, is a company valued at $31 billion. That's not DRH, excuse me. No, what am I? DRI. No. DR Horton, what is it? Right? Am I missing it? DHI? DR Horton. DHI. There we go. I got there. I was going to kick myself. I was just looking at this chart. DR Horton, check out that slide, okay? This company, $39 billion. So DR Horton, $39 billion. Lennar, about $32 billion. Look at these charts, man. DR Horton. And home starts were down. We got that number this morning. But tough charts there. NASDAQ 100 down by 52. Folks, thanks so much for tuning in to kick off your trading day right here with me at TFNN. Stay tuned. We got a replay coming up. Basil's out. We got live programming after that. Steve Rhodes coming up. Fast Market. Larry Pesavento. And I'll be back this afternoon at 3 o'clock. We got an interview with our man from Direction, Elliot Wallenbach. Have a great one, folks. I'll see you at 3.